broker market share, the amount of loans that brokers are doing, people will be surprised. And when I say it out loud, I think to myself, man, we're only doing 24.3% of loans. The rest is retail, banks, other institutions. It still seems low to me, but that 24.3%, which was the Q4 23 number, is the largest share since 2009.
Something that I failed to mention this morning because I did the daily financial news at 6:30 verse 7 was the fact that mortgage applications were up 12%. Thankfully, we're talking with Matt, the mortgage guy, and we can dig in and figure out what the heck happened last week. Mortgage apps up 12%. How you doing, buddy?
I'm doing great, Mike. How you doing?
I'm doing well. I did a daily financial news early today because I had a 7 o'clock podcast, and I missed it. I missed that mortgage apps were up 12%. I just saw the headline. I didn't read the article. What say you? What happened last week?
Yeah, after a gut punch where we saw rates go up, we've seen some give back on the mortgage rate side. I think that's part of it. I think new listings, spring has sprung, some seasonality, some sunshine probably has to do with it. So it's a mixture of things, but
Okay.
it feels very active. Active is probably the word I would use to explain my world right now on the mortgage side. And so, when you see a stat like that, you're like, yeah, that makes sense, right? Mortgage applications up 12%. What else do you think contributes to that?
Well, I think there's a couple of things going on. I do think the spring selling season is picking up for more of the country, right? Where winter is getting behind us. I also think there's a general feeling that rates are stickier. I think there was a time where people thought they were falling and thus they were delaying. I think there was time when rates were exploding, so they wanted to get ahead. Now I think there's a general feeling that, okay, the Fed higher for longer. If we're going to do it, we're going to do it. So I think there's some acceptance, I guess. And the other thing I think that's really going unknown in Housing Wire and Resi Club are talking about this is there's actually a little bit more new listings. And when you have more supply, you have more activity.
Right.
So I think it's a combination of all of those things. But I do have one follow-up question. I'm going to guess most of the activity is purchase versus refi. And I say that because in early January, we saw refis explode. We saw these streamlines. We saw all of these things. That's all behind us now, right? This is all net new purchase. Is that, or at least mostly, is that fair?
Yeah, I would say without even looking at it, it's probably that. Like the refinance index, like that went up week over week as well.
Okay.
But to your point, and to like mortgage industry as a whole, most companies that I look at are doing the vast majority of their volume in purchase. There's some outliers that
Now,
are
let me ask you historically, like if you go back to 2019, what is a brokerage business? Is it like 70-30 purchase refi? I mean, it's been so long since we had a normal year. What is a normal year?
right. And that's interesting too, because there's multiple different ways to do it. And there's some broker shops that are 98% purchase, 2% refinance. Like that's just their model because they feel like purchase is the place to be. There's others that focus on buying leads, refinance, and they might be refinance heavy. I think if you asked all brokers as a whole, they would probably want, most of them, not all of them, to do something like 80% purchase, 20% refinance, because
that felt about where I would have guessed.
yeah.
Okay.
I mean, my personal opinion, I love the refinance stuff and I'm never going to turn down the gravy. Yeah. And I happen to think that, especially in a time like this where people are financially strained, I'm changing lives just as much on the refinance side, maybe not currently right this second, but end of 24 into 25, I can save a family $300, $400 a month. Right. That's a big deal because I know there's a lot of satisfaction in, I helped someone buy their first house. They didn't think it was possible.
Mm.
I find almost as much satisfaction as, this single mom can now afford to put her daughter in, competitive soccer because she's saving $400 a month on her mortgage. Things
Right.
like that are just as
Yeah.
big of wins.
And I think, and again, and I do think the housing industry, right? Agents, title, all of that, mortgage, you guys have been in a depression for 2 years, a transaction depression, which equates to a money depression. I really do see green shoots. I'm a complete outsider, but I talk to agents and brokers from across the country. I think your business is they're small, right? There's nothing, you're not going to mow the lawn yet, but there's some green shoots coming out. And I think the longer that we stay around 7 actually will help refi business 2 or 3 years from now, when ultimately rates go down and they're 5.5. And you could go to that person and go, hey, I served you well. Let me help you again. I could save you $400. I just see it getting better from here, I guess is what I'm saying.
Yeah, I agree with you 100%. I like looking at stats and numbers, and it's interesting because, I've got my personal business, which is just, I'm a small mom and pop band out here in California. But then you look at something national like UWM, and I just so happened to look at their Q4 report, and I know they did 245 billion in 2021. And you think about like how many loans
Yeah.
that is, like that's humongous.
Yeah.
22 and 23 combined were not that big. I think it was like 127 billion and 108. And
Sounds like a
so,
depression to me.
right. And so when I look at personal business, I'm like, man, 22 and 23 combined weren't as big as 21. Well, if the largest wholesale lender in the country also
Mhm.
has similar numbers, then it's an industry thing. It's not that like I'm
Yeah, it's
providing
not a
less
you
value.
thing.
I'm
Yeah.
doing less of a good job. And so, on that subject of brighter times ahead and mortgage brokerages, I just saw a cool stat I wanted to share.
Mhm.
The broker market share, the amount of loans that brokers are doing, people will be surprised. And when I say it out loud, I think to myself, man, we're only doing 24.3% of loans. The rest is retail, banks, other institutions. It still seems low to me, but that
Mm.
24.3%, which was the Q4 23 number,
Mhm.
is the largest share since 2009. And,
Interesting.
quick history on mortgage brokers. Everybody blamed the crash on brokers. Everybody said that
Ah,
brokers were, I mean, this is just the truth, Mike.
no,
Um,
I've seen the movie. I saw those characters.
Right. And so, one, I'm going to dispel that. Like, brokers didn't create the products that ruined everybody and the neg am loans and the stated income. Like, that wasn't a broker, born thing. Everybody was doing those types of loans. It just happened that, brokers were probably doing them at scale. And so they got busted. But after that, Mike, the broker market share of loans written went from 25% down to 15 in 2011, and then 14.5 and 13, and then
Oh,
it's
wow.
gone 16, 18, 19 to where it is today, and it's continuing to grow. For anybody who doesn't know, like a mortgage broker, somebody like myself, has my own kind of small business. And when you come to me as a consumer, you fill out an application, we review it. You've got this credit score, you got this much down. And I look at your file and go, okay, should I send it to United Wholesale Mortgage? Should I send it to Windsor? Should I send it to EPM? I've got optionality of where to
Mhm.
send it. I also have thinner margins. And like, I don't
Right.
want to make this a 10-minute dissertation, but these big valley mortgages, movement mortgages, they're just a big retail company that might have 475 basis points in margin built into the loan. So you're like, why are they 7.75 and Matt as a broker is 7.25? The 225 that is margin with UWM, there's no extra layers. There's no
Right.
corporate buildings. There's no other stuff. And so the consumer gets it better, faster, cheaper. UWM and large wholesale lenders did a study, Mike. Average consumer saves $9,400 going to a
Oh,
broker. This
wow.
is real HMDA data. This isn't like me trying to be a
Yeah.
salesperson, right? But it's the truth. So I'll leave it there. I'll stop.
Well, I think there's a couple of things. that are just facts in business, right? I've been selling stuff since I was 13, selling, hammers and screwdrivers at Sears. Um, if you're going to a big shop, a body shop, and it is, somebody that's paying for marketing and leads and buying lists, that all has to be paid somewhere. That's all called overhead. And the bigger the shop, the more the overhead, the bigger the number of VPs, the more the overhead. That stuff's got to be paid somewhere. And it's the consumer that pays for it. So I actually find it shocking. If you would have made me guess what percent of loans are originated by brokers, I would have not guessed 24%. I probably would have been around half. And the reason I would have been half because some of the big banks and some, builders and, all of that stuff would make sense. But I'm pretty shocked it's only 24%, given the saving, speed, customer service. The other thing is customer service, right? Getting to know, follow up, having real conversations like, I don't know. I don't know if this is the right one for you. Um, you get that with a broker, especially like you're calling yourself a mom and pop, a little California shop. Just it's it's um it's cheaper and better service. And it's kind of crazy for me to think about.
Yeah, for sure. And that's what I tell people too, that come to me and they're like, well, my bank or well, this, like, that's all we do all day is mortgage. If we don't do a phenomenal job in mortgage, we're out of business.
Yeah.
No checking accounts, no credit cards, no,
Yeah. No loss leaders for you.
yeah, none of the other stuff. Mortgage all day, every day. So we're pretty good at it. So greatmortgagebroker.com. That's how you connect me and my team. We'll leave the ad there. Speaking of, large lenders across the country, I've got to talk about this, Mike, because it was announced and I want to put some context around it. Did you see the thing with State Farm and Rocket?
No, I didn't. What happened?
So 2019, Rocket came out and said, we're partnering with State Farm agents, with financial advisors, with real estate agents, licensed these people and said, send us the business, we'll give you a kickback. And kickbacks in mortgage are illegal. They found the way around it by saying, no, you're licensed. You're a licensed loan originator.
Okay.
And
So it's not, okay, got it.
Here's the problem. Here's why when it came out in 2019, I go, nope, won't work, will fail. Mortgage isn't just like, oh, send us the app, we'll take it from here. Easy peasy, right? Mm-hmm. You're already, in my opinion, this is just my opinion, getting less than stellar advising from a kid in a call center who works for a Rocket Mortgage. Big company, okay. And their focus is just sales. It's not necessarily advising. And so to partner that with affiliated parties who just want to kick back by pushing somebody there, to me, it just felt like this is destined to fail. And so it did. They announced as of March 29th, they're not accepting any applications. They've got to be funded by June. And then they're just like sunsetting Rocket Pro Originate, which is basically like, force your clients to use us. We'll give you 50 basis points in kickback. At the end of the day, like serving the consumer and having a great client experience, that's how you gain market share. That's how you do more business, not by giving somebody a kick for like,
no, I hadn't read this, but I've seen models like this when I was in sales and different things, and you're basically trying to get a piece of a captured consumer.
Right.
And in a market like mortgage, the captured consumer really does have options. So
better options,
better options, cheaper. Yeah, it doesn't feel like something that should have worked. So I'm glad it didn't work.
Yeah, me too. Yeah, I've got a fiery thumbnail for tomorrow's YouTube video.
Yeah.
So if you're not subscribed to Matt the Mortgage Guy, check out the fiery thumbnail. Check out all my unfiltered opinion about Rocket and this partnership. Yeah, because I'm pretty passionate about it, and I'm passionate about it because at the end of the day, I care about the end consumer. I go to One Rental at a Time event and I talk to the people. Like there's human beings on the other side of these loans. And so when companies, especially companies which I know from the very center of the organization, just want to sell and they don't care about the client, like I'll speak on that. And I don't mind, getting my hands dirty, speaking out against people that are just, trying to
Yeah.
sell a consumer and whatnot. Cause, I'm a champion for the
There you go.
consumer.
People's champion. Yeah.
Yep.
It's really interesting to watch business. You know, it's especially when it gets tough, right? Again, I'm a complete outside in a mortgage, although I talk to folks almost every week. And your industry, your peers, right? There's about half as many as there were 2 years ago, which means the ones that are still around have staying power. They have a business model. They actually have customer service. And what I see coming for you is a lot of growth because all the deadbeats are gone and the failed mortgage brokers are, out preaching, housing crash or something else because they can't do mortgage. So um, yeah, it's gonna be fun to watch, see where you go.
Yeah, I appreciate it. And I know that for my colleagues, I know a lot of people that do it well. They do it with, passion, and they do it with true love for the end consumer. There are brighter, greener pastures ahead. We just talked about it, right? Mortgage applications up 12%. I think we got 3 or 4 in contract this week. People are out there
Nice.
buying.
Well,
And
again, I think the spring selling season, it will surprise people. Clearly, Housing Wire and Logan or Lance from Resi Club have been right. Inventory is growing. Inventory means there's going to be more options, and that will lead to more transactions and happy sellers and happy buyers is my hope.
Yep. Yep. What was the number last year for total real estate transactions? I was
Yeah, I think
riffing
it. I
yesterday.
think it. I think it came in at just under 4.1 was the annualized total, but the low annualized was 3.79. I think that was November.
Okay. I want to ask you too, because somebody's in my comments and I wanted to place a large wager, which,
Okay.
they're an internet troll, so they won't place a wager with me, but it was fun pretending.
Hmm.
Cause I know what I've seen, there's varying, is it going to be up 10%, 20%? This person said it's going to be in the threes. And I said, there's no possible way that it goes
For the
down from,
year,
right.
no chance.
Yeah.
No chance.
That was
Zero.
me. That's why I said, give me a number. We'll bet
Yeah,
it.
we're in.
Yeah, me and Mike we'll escrow the money. We'll put it with a third
Yeah, I'll
party.
put it wherever you want. Yeah.
Any amount you want. So what's your guesstimate for that number in 24?
Yeah, so my guesstimate for 24, if I was going to put an over under, and obviously this has a lot to do with rates. In my assumption right now, I'm going to assume rates for the year are really close to 7%. I'm going to guess 4.25, maybe 4.3. If we see rates at 6.5, like we did in January, 4.5, 4.55, somewhere in there.
That's what I was gonna say. If rates are under 6.5, I think it's over
Oh,
4.5 million. If
yeah,
rates
could
are
be.
above 6.5, then the 4.25 to 4.5 is probably
Yeah,
the range it falls
I would
in.
take
So
that. I would take
yeah,
that. Yeah.
yeah, yeah.
Yeah.
Being in the threes, you got
No
no
chance.
shot. So I'm taking all bets. Just
Yeah.
let me
Yeah.
know
The
where you want to
threes.
escrow the money. We'll put it with a third party and
Here's the deal. We could have rates at 8%, and I don't think we do something in the threes this year. It, no, I don't think so. No, you're good. You're good. Where can people find you? Want to reach out, talk shop, see what's going on, how you can help them?
We're licensed in 48 states. So greatmortgagebroker.com. You fill out the quick form, connect with me and the team. We're happy to help. Yeah, it's been fun. It's been fun helping people in Florida, Texas, Tennessee, of course. I'm helping a lot of people in California still, even though, California's tough to invest in. Check out the video on my channel. Me and Ty sat down and chatted while we're out in Vegas, and I put that on
Nice.
my channel. So that's a good one. Greatmortgagebroker.com.
Thank you, buddy.